Do you wish you had a great credit score and could enjoy all the benefits that come from having one? Or maybe you've never even checked your credit score before, but you're curious about how it's calculated and what you can do to improve it. In this video, we'll break down the mystery of credit scoring, and if you stick around until the end, I'll provide you with some valuable tips on how you can really improve your credit score. Whether you are a seasoned credit user or just starting out, this video is packed with practical tips, real-life examples, and some advice to help you unlock the secrets of credit scoring and pave the way to your financial success. First things first, let's clear up a few misconceptions. Your income level, your occupation, or any assets you possess have absolutely nothing to do with your credit score. This means that everybody can build and maintain a great credit score. Also, if you have heard of credit repair companies that offer to repair or fix your credit score for a price, well, this may seem tempting, but these companies can't do anything that you can't do on your own for free. In the worst examples, debt settlement companies even encourage you to stop making payments to try and settle the debt for less than you owe. However, this plan can result in major credit score harm and may not even ultimately work to reduce your debt obligations. Now, let's get into the information that we all must know. Credit scores fall within a range of 300 to 850, and they're determined by 5 main factors. Understanding each of these factors is crucial if you want to build a stellar score and avoid unknowingly doing things that hurt your score. The first factor that determines your credit score is your payment history, which accounts for 35% of your score. This basically is a measure of whether you pay your bills on time, such as your mortgage, your credit card bills, your car loans, or even smaller debts. For example, utility companies don't normally report customer payment history, but if an account becomes delinquent, they turn it over to a collection agency that will show up on your credit report and makes a serious impact. Municipalities have also been known to report things like unpaid parking tickets or even library fines to credit bureaus. Since 35% of our report comes from our payment history, it's important to take care of how we pay all of our bills. Just one payment that's 30 days late can drop your score anywhere from 30 to 80 points. But the payment that is 90 days late can lower your score anywhere from 80 to 150 points. And keep in mind that a past due payment stays on your report for up to 7 years, but their effects do diminish over time at least. The second biggest factor that determines your credit score is what's called our credit utilization, and this accounts for 30% of our score. This refers to how much of our available credit limit we are using. For example, if you have one credit card and it has a $10,000 limit on it, and during the month you charge $2,000, you've used 20% of what was available to you. If you have 2 credit cards and they both have a $10,000 limit, you have $20,000 of available credit. In this case, if you charge $2,000, you've only used 10% of what was available to you. When you're trying to build your credit score, you absolutely want to keep this below 30%. And the closer to 10% utilization rate you can have, the better. Basically, they want to see that you have access to credit, but you are disciplined enough not to use it. A few key points to keep in mind when you're thinking of credit utilization. 1, even if your bill is paid in full every month, you might think your credit utilization is 0%, but that's not true. It's based on the specific day your credit card issuers report it to each agency. 2, Credit scoring models consider both the overall credit utilization of all your cards and the utilization on each individual card. Thus, focus both on your overall and per card usage. And 3, your credit utilization is only based on what's called revolving credit. Things like a mortgage or a car loan are not included in this area. Now, the third factor that determines our credit score is the length of credit history, which accounts for 15% of our score. This factor considers how long your credit accounts have been established, including your oldest, your newest, and the average of all your accounts. This is why canceling a card could hurt your credit score if it's the oldest card we have. Fourth, 10% comes from what's called our credit mix. Credit calculations consider the distinct types of credit. Things like revolving debt, such as credit cards, and installment loans, such as mortgages, auto loans, student loans, personal loans. It looks good if we can manage multiple accounts of different types. It's not important that you have all these types, so don't be taking out a bunch of unneeded loans to support this area. Fifth, 10% comes from hard inquiries, which occur when you are seeking a new credit line. These types of hits can ding your credit score, especially for people who don't have a long credit history. We certainly don't want to have too many of these types of credit checks. However, if you're shopping around for a new auto or a mortgage loan, 2 or 3 inquiries usually count as one if they occur in a brief period, usually less than 14 to 30 days, depending on the credit score model used. So, be sure to keep this in mind if you're in the market for a new loan. And be careful when you're out there shopping. It's quite often that department stores offer us something like 20% off at the checkout counter if we apply for their credit card. Keep in mind, every time we do this, we are probably getting hit with a hard inquiry on your credit report. Before we get to the main tips on building a great score, let's take a look at the typical scores and consider what's good. According to American Express, the average FICO score rises with each consecutive age group. As we can see here, scores are typically lower for those that are younger, but this doesn't have to be the case, and I'll provide you with an example of this, sharing a story about my son. Now, what's considered good? Well, according to Experian, about 67% of Americans have a FICO credit score of 670 and above, ranking them good, very good, or exceptional. And as we can see, the tiers of a Vantage score credit score, which is just one of the other models used sometimes, are slightly different. Now, take these ranges with a little grain of salt. These ranges are a bit fluid because there are different systems and scoring models. The 2 main types of competing systems are a FICO score and the Vantage score. Depending on the lender, they may prefer one over the other, but the FICO score is most often used. There's also 3 different credit rating agencies. They're called Experian, TransUnion, and Equifax. All use a slightly different mathematical model to calculate your score. Now, before a list of tips to build an excellent credit score, I want to share a personal story about my son. When he turned 19, I had him get a credit card in his name. He then made 1 or 2 small purchases each month and paid the bill in full every time. That purchase can be as small as a few gallons of gas or a pack of gum. The amount doesn't matter. Just keep your credit utilization below 10% if possible. What matters is that you're using it each month and paying it in full each month. By the time he turned 25, his credit score was around 780, which is extremely high for someone that age. In fact, it's about 100 points higher than the average person of that age. I also had him call into the credit card every year or two and ask to raise his credit limit. That way, if he ever did need to make a bigger purchase, his credit utilization would remain low. And that's it. Just show you're using credit in a responsible way and paying the bill every month. By the time he turned 30, his score was pushing 820. Now, two main things to keep in mind. Carrying a balance on a credit card does not help your credit score. Unfortunately, most people mistakenly think it does. So don't use your card to buy things you don't have the cash for in the first place, and pay your bill in full every month. 2, using a debit card does not help you build a credit score in absolutely any way. When using a debit card, you are not showing you can manage credit. If you don't trust yourself with a credit card, there are other options you can consider. First, you can get what's called a secured credit card. That's where you first make a deposit, let's say $200, and then your credit limit is $200. Just keep in mind your credit utilization when you have such a low limit. You can also have a card and request an exceptionally low limit so you can't get yourself into too much trouble. And if you really don't trust yourself, you certainly don't need to carry the card with you. You could do something like set up your Netflix payment on a credit card, and then have your credit card auto-pay from your bank account each month. Just make sure your credit card is set to be paid a few days before the due date. You can also ask a family member that has an excellent credit score to make you an authorized user on one of their cards. This is a method called piggybacking, and it helps give your score a boost. Now that we understand what goes into the credit score, let's talk about the main ways to improve it. First, as we mentioned earlier, paying bills on time is crucial. Even one late payment can cause a major hit to your score. Set up automatic payments or reminders to help you stay on track. Second, try to keep your credit utilization below 30%. If you are currently over that limit, work really hard to pay down the balances, or maybe ask for a credit increase, but be careful not to use that extra credit. If you have multiple cards, try to evenly distribute your balances to keep your overall utilization low. Third, don't close your oldest credit accounts. They help establish your credit history, and closing them can lower your average account age. Fourth, consider getting a credit card if you don't already have one. Use it responsibly, pay your balance in full each month. This helps establish your credit history if you are just starting out, and can help your payment history. If managed correctly, a credit card is simply one of the quickest and easiest ways to build your score. And fifth, don't consign yourself to any loans. If the borrower misses payments or defaults on the loan, it can hurt both your credit scores. Ultimately, you are responsible for the debt if the primary borrower can't pay. And finally, monitor your credit report regularly for errors or fraudulent activity. You're entitled to one free credit report from each of the 3 major credit bureaus each year. You can visit annualcreditreport.com to request your report. Remember that building and maintaining a good credit score takes time and a little bit of effort, but it's worth it in the long run. A good credit score can save you thousands of dollars on interest rates, insurance premiums, and even impact job opportunities. Thank you for watching this video. I hope it's been helpful at demystifying credit scoring and giving you the tools to build your financial success. Please hit the like button and subscribe for more helpful videos.